Hello, everyone. I wanted to provide an update on the current states of the market and explain how I and the investment committee are currently navigating these volatile times. It's very easy to say that the beginning of this year has been quite a bit of a rough ride in both the stock and the bond market. If we look at the stock market, the S&P 500 is down about 15% for the year, and the tech-heavy NASDAQ 100 is down about 24.5%, well into bear market territory. Now, looking at the bond market, it's even more of a bleak story. The US aggregate bond index is down about 9.5% for the year, and long-term US treasuries are down 20%, making this the worst bond market since 1842. At the Fox Alliance, we have been talking for years about the potential for rising interest rates and how that affects bond values. And we've seen interest rates go up significantly over the past year due to the Federal Reserve's attempt to combat really high inflation, record 40-year inflation. Inflation right now is at about 8.3% coming in from April, just slightly lower than it was at our March peak. And one of the reasons why the Federal Reserve raises interest rates during an high inflationary period is to try to decrease demand in the economy. When interest rates go up, it makes it more expensive to buy a home, to buy a car, even to go to college. And more importantly, it makes it expensive for companies to buy other companies and create acquisition in the economy. That decreases consumer spending on goods and services, and therefore can decrease GDP. Decrease in GDP can oftentimes lead to recessions, and that's a really important factor to remember during these times. Just as a reminder, a recession is defined as two decreasing quarters of GDP. And the first quarter of 2022, we saw GDP decrease by 1.5%. So technically, this quarter, if we see another decrease in GDP, the United States will be in a recession. It is really important to remember what happens during a recession, right? Again, decreased demand in the economy, therefore decreasing the growth of the economy. Our investment committee thinks that it is not only possible, but likely that we will see a recession in the next 18 to 24 months. And it very well could be sooner than that, just depending on how much the Federal Reserve is willing to raise interest rates and take money out of the economy to combat inflation. In history, there's never been a single time where inflation has decreased by 4% where the United States did not fall into a recession. Now, recessions can be scary. They can cause a lot of fear for all of us. But it's very important, especially as investment managers, for us to remember what it means for us to actually be in a recession. One, the investment committee has done about 2 to 6 months of due diligence for every single investment that we are currently invested in. And we continue to do ongoing due diligence to make sure that those investments are of the highest quality and are withholding in potential recessionary environments. We also have put together personalized, tailored investment solutions for every single one of you, keeping your risk tolerance and your time horizon in mind. Those things don't change when the market is down. We've built these portfolios having these types of times in mind, trying to protect you as best as we can on the front end. But lastly, and I think the most importantly, it's important to remember that when there is a recession, it can provide great investment opportunities and high quality investments that are trading at a discount. The investment committee has been putting together a list for the past 12 months of investments that we see as huge opportunities in a potential recessionary environment. We are excited at the opportunity to invest in those companies at great discounts. Now, for some of you, we have already talked to you about your comfort with moving into more opportunistic investments during a recession. If I have not talked to you about that, I will be reaching out to you in the coming month or so to get that comfort level for you so that if we do have a recession at any point in the near future, we're able to take advantage of that for you as quickly and as efficiently as possible. As always, we are here to help answer your questions, comments, and concerns. And we want to be available for you in any way that we possibly can during these uncertain and in somewhat fearful times. I'll leave you guys with a quote from the very successful, very famous investor Warren Buffett. It is important to be greedy when others are fearful and fearful when others are greedy. There is a lot of fear in the markets right now, and a recession would only increase that fear. It also provides an opportunity for us to get a little greedy and buy some of those investments that are very high quality at a really nice discount. I hope that you guys have a wonderful week. Again, if you need anything, please do not hesitate to reach out via email, phone call. We're here to help you. And I hope that you guys have a great week, and we'll talk to you soon.